Hello and welcome to this very special episode of IPO KYC. Ather Energy is India's second pure-play EV maker and it's getting all set to list on Dalal Street. Founded in 2013, Ather Energy was a college project of two IIT Madras graduates, Tarun Mehta and Swapnil Jain. And today, it's valued at nearly $1.5 billion. It's also been a while since we've done an IPO KYC, and this IPO will test the investor appetite. One, after the market turbulence on account of Trump tariffs, and two, even the EV ecosystem, given the mess at Blue Smart or the troubles at Ola Electric. So let me waste no time and welcome our very special guests on this episode of IPO KYC. I have Tarun Mehta, co-founder and CEO, and Swapnil Jain, CTO and co-founder. Thank you very, very much for joining in.
Our pleasure.
So let me start with the question everyone wants to know, right? Path to profitability. You've been loss-making for the last, I think, since inception now. When do you think you will turn profitable?
See, so any new business, especially R&D and a deep tech business like ours, where there's a lot of investment in product development, in IP, in platforms, obviously it's going to be investment heavy in the early years, and then the losses are recouped and profits come. We are no different. After 10, 11 years of investment, our recent trajectory has been very solid. Any profitability is a function of two things, which is your unit economics and then the volumes you put behind it. So how are you doing on both? Unit economics, you will notice in our recent quarters, there's been an enormous improvement. We have almost doubled our gross margins over the last 3 quarters, over 3 quarters of FY25, hitting almost 18-19% kind of gross margins, adjusted gross margins. So significant progress there. And if you see our volumes, again, YTD till Q3, there has been an almost 35-40, I think almost 40% plus kind of growth. So volumes have also grown quite healthily. So put these things, two things together, I feel pretty bullish about where we're headed as a business on profitability. Also, if you see our overall losses, they've started to trend in the right direction. If you see, again, 3 quarters performance, losses have been reducing, not just at percentage, but even at an absolute level. So I think the basics of a business, the more you sell, the more margin it brings home, it covers your fixed costs, and you become profitable. I think the engine starts to make sense in where we are. And I'm very optimistic about where it's headed. So
peak EBITDA losses behind the company, and from here on, losses should continue to moderate, as we've seen?
I think if volumes are continue to grow, as we hope for them to be, for the industry and certainly ourselves, and we continue to defend our margins. Remember also, Ather's positioned its products in a more premium position. That's allowed us to command generally a more premium pricing. I think that our ability to sell software separately as Ather Stack, these are things that give me a lot of confidence on continued margin growth. And volumes, nobody's challenging where EV industry is headed overall. It is a growing industry. So I think, yes, I definitely feel that we continue to move towards profitability.
So you spoke about unit economics, which is basically gross margins. And gross margins in the first 9 months of FY25 are 19% versus 9 months in the comparable period of last year.
Correct.
These margins are sustainable and should improve. Gross margins, right?
Yeah.
That's the trajectory.
These are not one-time spikes. They've come about as, honestly, and I'll give a lot of credit to our product development teams. They've come about because of fundamental and hence sustainable reductions to our cost structures of the core vehicle platforms across chassis, electronics, battery, across the board. There's been a lot of work on the supply chain front, which has fundamentally reduced cost structures. With introduction of multiple vendors, with a lot of work on value engineering, a lot of work on straight pass ratios. So this is not a one-time, and the proof of that is this is not a 1 quarter or 1 month performance. This is now been consistent over 9 months. So hopefully that gives us a lot of confidence.
So for you to turn profitable, at least at the EBITDA level, what should the gross margins be? Should they hit 25%? Do they need to hit 30%? Is there an aspiration that you want in terms of a business model?
See, I think difficult for me to comment on ourselves per se, but I can point to a few references in the industry. I think Indian two-wheeler businesses have been incredibly strong, and we have a lot of respect for them. And I think those become our guiding compasses on margins. Mass premium players have in the past been able to get to late 20s, even early 30s kind of gross margin structures. And I think those kind of gross margins in the two-wheeler business seem to generally ensure strong profitability. So I think for any business that's trying to build a mass premium kind of play, An ultra premium strategy like some of our peers, like in the bike side, they can obviously yield much higher gross margins. But a more mass premium play with scooters, I think seems like that kind of number seems to have worked out very well in the past for our peers.
Okay, and there's no reason why EV gross margin should not get to the ICE gross margins, right? There is
different structures of the industry and different structures of the product.
But you can aspire for late 20s gross margins, realistically.
I think there are certain advantages with EV sales. I think electric opens up this entire window of opportunity, an entire opportunity around software, which was not very strong, I think, with ICE architecture. Selling software allows you substantially higher margins, as you will see even in our numbers, and something we are also trying to perfect more and more. And I think this is something very new and novel with electric. Not just in India, actually even globally. Tesla sells its FSD pack at a substantial markup to the vehicle price. We sell our software on top of the vehicle price with a healthy markup. So I think electric, if anything, opens up some new opportunities for additional margin and revenue, which probably was not very strong with ICE. And that's why I'm even more bullish with EV.
Fair enough. That's a point well made. So for you, what percentage of your revenue comes by selling software, and what are the gross margins on software?
So roughly about 6% of our revenue comes by sale of software. And it's a very high gross margin business, given that software architecturally is generally a higher margin business. So that's just the nature of that part of the world.
Very high. We'll go with that. What about FY24? I mean, your revenues dropped by 1.5%. You bounced back very smartly in 9 months with a 28% top line growth. What's the sustainable revenue growth we're looking at?
I think there is a secular growth that's happening, which is the growth of scooters overall. Scooters continue to grow much faster than motorcycles. And given that we are scooters first right now as a business, that part of the growth affects us also. The other part is, however, the expansion that we are doing. So we are expanding our stores. And the recently introduced model, Ather Energy, our convenience scooter, that's landed very well in convenience first markets. So there are a lot of new stores that we're adding in those parts of the country. So distribution will continue to expand healthily for us, and that's something we're excited about. In addition to that, remember, our industry is at a very early stage in terms of products. A good two-wheeler maker would have 6, 7, 8, or possibly even 10 products in their portfolio. Our industry is still at a stage where we have 1 to 2 products each. So we are overall at a very early stage. There's nothing wrong with us. It's just that we are at an early stage. As our portfolio expands, and I'm not just speaking for Ather, I'm speaking for our entire industry. As we go from a single product or a 2-product company like Ather to potentially 6, 8, 10 products, there's natural expansion of the addressable market that is bound to happen. And as that product portfolio expands, it'll make it more and more viable to expand distribution to the hinterlands of the country.
Got it.
Today, EV is still largely an urban phenomenon. As we go from tier 1, tier 2 to now increasingly more tier 3, a very large chunk, perhaps one of the largest chunks of scooters are sold in that part of the urban country. We haven't even entered there yet in a big way. So I think there's a lot of opportunity on both product and distribution expansion. And that's what gives me a lot of confidence for our industry's growth in the near term.
So Swapnil, come in, right, in terms of the product expansion. You're early in the EV game, but you've had only 2 products. You've gone slow and steady in terms of launching. When do you get to 6, 8 products from the current 2? And what about a motorcycle? Is that something you're working on?
Right. So, firstly, the aspect of building it over time. The first 4-5 years of the company, we spent a lot of time building the platform itself. Automotive is something where you have to invest in building a robust platform, and then you build products on top of it. And that's what you would see in our product portfolio itself. Then probably until 2020, 2021, we had 2-3 variants of the product in the market. And then over a period of time, we have added more variants. We have added of the 450 itself. Then we've got the 450S. Then we got the 450 Apex. And then we have the Arista. So if you see the last 3 years, we have been able to rapidly build up on the same platform and build multiple products. And that's the strategy we are going to continue to adopt. Our next platform, which we are now working on a completely new platform. with the same idea, build a robust platform, and then build out a lot of
When will
products
that come
on
up?
top of it.
The yield platform is under development.
It's under development.
Obviously, we can't give you specific timelines, but it's something we are quite excited about.
And motorcycle?
And on the motorcycle, again, motorcycle is a similar at a similar stage that we are building the platform. So when will we bring it out? I think we'll have to find out the right time to bring it out. The large part of the work is to build the platform, and that's what we are first. We are prioritizing that, building a robust platform and keeping it ready, and then find the right time to bring it into the market.